Home sales plummet, inventory skyrocket, and I sell my own house in 2 weeks, making a huge move across Canada. Yeah, all this and more with a good friend and mortgage broker, Mr. Dion Beg. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Hey Gary, I'm good, man. How you doing?
I'm doing excellent, excellent. We are in the July summer months here in Canada real estate world of, we'll say, interesting and craziness and hot market, but not the hot market you're thinking.
Well, yeah, I guess as all the data is showing, we've had a pretty slow June. But before we get to the stats and numbers for this month, I'd really like to start today by talking about you and what's been going on in your world, because some big things have happened. So why don't you share with us what's been happening with you in terms of real estate, Gary?
All right, sounds good. Sounds good. If you've been playing along, you've been following along on social media, we made the decision, my wife and I and three kids, to sell our family home, which has been in the family for 40 years, I think, close to that.
Wow.
Yeah, a
Okay.
long
I
time.
didn't
We
know
bought
that.
it.
Okay.
Yeah. We bought this home about 8 years ago and made it our own. Did a big renovation, addition, and pool, and you can see that all on my social media channels. But we made the decision to sell this year solely based on lifestyle. And there's some neat ripple effects from that. And we decided to move right across country, Dion, to Kelowna, where there's mountains and lakes and kind of suits more our lifestyle with skiing and mountain biking and the outdoors and that type of thing. We've always wanted to live in the mountains, and we're now making it happen. And we are in the midst of it. We were able to sell our house, which we can, get into a little bit, and move to Kelowna, and we
Yeah.
have something out there now.
So I've been to Kelowna. It's a lovely place. What made you choose Kelowna, and how long have you been thinking about Kelowna?
Okay, so this is the funny thing. When a McGowan gets an idea in their head, they make things move pretty quickly. Quite frankly, apart from we've always wanted to live in the mountains or in BC, ever since, probably after high school. Really, we made this decision this Christmas, or this past Christmas into New Year.
Okay.
So December 2023, we made the decision to get our house ready to sell and move to Kelowna. Why Kelowna?
Yeah.
It's one of the biggest cities in BC, in the interior BC. International airport, easy access in and out, and of course the beauty of it. If you've been there, you know.
And then for you on a personal level too, tell everybody what your hobby is.
My
You're a crazy
hobby,
man.
yeah, I wouldn't say that. Uh, I do love mountain biking. Of course, that's one of the mountain biking like, amazing places in Canada to go, and so many
Yep.
places within a few hours drive. And I got to tell you, Dion, the house we chose, 8 minutes away, there's trails, so I could actually
Oh,
ride my
really?
bike there. Yeah, yeah,
So
yeah.
I was surprised a couple of years ago when I first went to a ski field in summertime, and I saw that they had refitted their what do they call them? The carriages that take you up as a skier. That equip them for mountain bike hookup. Is that
Yeah.
what happens in Kelowna too?
Yeah. I love
Yeah.
that. I love that you called it a ski field and you called it a carriage. But hey, we're
What
gonna
do you
go
add it up?
with it.
I'm Australian. You could take the Australian out of Australia, but
That's right. No, you can't. No, you can't. Yes, the local ski mountains.
thank
Uh,
you.
they do.
Ski
They
lift. Ski
add
lift. I got it right. Ski lift.
ski lift. They add
Yeah.
bike carriers to their ski lift, and you literally just put your bike on a lift and
Yeah.
go up to the top, and you can ride down, and it's pretty crazy. Yeah,
All right. Cool. Cool.
yeah.
Okay. So when is the big move? When are you moving out that way?
uh, right in the middle of August. So August,
Okay.
if you're watching this later, August 2024, we make the move. We're very, very fortunate to get our home sold, because as we know, and we're going to talk about the market.
Yeah. Yeah.
We
Let's.
get our home sold, and then
Yeah.
the beauty of it is there is such tremendous amount of inventory in Kelowna, which we're okay with because we're buyers, and this is
Yeah.
a lifestyle choice. We had many options and negotiation power there and all that kind of stuff. So it's coming soon.
So, other than Kelowna, what other potential areas did you consider moving to?
Yeah, it's a good question. So we knew we wanted to be in what we call the Okanagan Valley,
Right.
and excuse me. So you have Penticton, the very on the south side. So it's about an give or take a little bit less than an hour south of Kelowna, or you go north and about 40 minutes, 45 minutes north. Oh my gosh, the town escapes me. All of a sudden, we were just there, but where Silver Star Ski Resort is, Vernon. I knew it would come to me.
Okay.
Those kind of the three. And then you have Kamloops, which is about an hour and a half away. So you do have some you have some opportunities
Sure.
there, and then you
Yeah.
can even go even smaller and more picturesque, you could say,
Hmm.
into Salmon Arm and Revelstoke. But Kelowna is kind of that gateway into the Okanagan. It's 4 hours from Vancouver. Like I said,
Right.
international airport. Big white ski resort is close by. So there's lots of, it's funny as I mentioned this to all my BC friends, like, oh my gosh, yeah, we're moving there too. And that's where we're retiring to. And we always
Yeah.
knew we would retire to the mountains. So why wait?
Good for you, man. Good for you. Okay, so let's talk about the logistics of the sale of your place and the purchase of the new place. Yeah, give us the story there.
So as everyone knows in the GTA market, things are changing quickly, meaning we went from, even back in January, where it was somewhat of a seller's market to where it softened. And now, funny enough, if you actually look at the stats, people would think it's a seller's market. And it feels like that, Dion. However, we're actually in a balance market of about 3.5 months worth of inventory. And that actually tells us we're in a
Okay.
balance market, which means if you put up your house for sale, your home could take up to about 3.5 months to sell. And
Right.
we didn't really want to play with that kind of time, right? We
Yeah.
wanted a quick sale, and not to say we priced it low for a quick sale. We priced it at what we thought was fair market value, and we have a beautiful home. And if you can go follow me on Instagram, you can see all the pictures of our home and stuff like that, and a pool and 5-bedroom home and all sorts of different things in the Stouffville area, and we were able to follow along what's going in the market, make some adjustments. We had it listed and we had to reprice it. And that's we're going to talk about that. We had to reprice it pretty quickly. And that's the thing, Dion, is a lot of people will wait to reprice. So we started at
Yep.
price A, and 10 days later, we actually moved to price B because we didn't want to just sit there and wait. Sometimes you got to take action. And we typically, realtors will say, why don't you wait to a Monday or a Tuesday? We just did it on a Saturday. We got an offer on the Sunday,
Mm.
and it was only at the end of the day, we had an accepted transaction on our accepted offer on our property, $30,000 less than what we priced it at for
Okay.
price B. And boom, boom, boom. You make things happen. You
Amazing.
don't want to wait, right? And especially when you just start to see, Dion and my friends, when showings just start to tail off a little bit,
Yep.
you've got to do something. And I didn't
Right.
want to
Right.
wait for that to happen.
Okay. Great. Great. So great result for you. Can I ask you, Gary, this home that you've just purchased in Kelowna, how many? What number property is that as your family home? Is it your second, third, fourth? Have you done the
This will
math on that?
be our fourth family home,
Fourth.
and we've
Okay. This will
owned
be the fourth.
a family home for about 26,
20 years.
7 years. Yeah.
Okay,
Yeah.
rolling forward. Okay.
Yeah.
But the difference here is that I'm sure, and I'm pretty sure I'm accurate here, all your other purchases have been a step up. You've been upsizing in terms of price, right? Is this the first time that you've gone in the other direction?
In a sense, first time ever,
Yeah.
we've gone drastically down in price, about 60%, 70, yeah, about 60% of the price than what
Okay.
we sold for. We're
Right.
buying in Kelowna, and I'm a sucker for a fixer upper, so we bought a fixer upper. However, it's a larger house. We're moving from about 2,900 square feet to 3,400 square feet. It overlooks the lake and mountain views and everything.
Yep.
However, you just that lifestyle change has allowed us to do a couple of things, which I know we can talk about here, Dion. Is A, we're eliminating our mortgage, and that again is a lifestyle choice. However, there's some unique things we can do with that now that we won't have a mortgage on the home. We can do a home equity line of credit and option, and all sorts of different things.
Yeah.
So
So let me just touch on that very briefly if I can. So there's a lot of people who go through this downsizing process like you are, downsizing the purchase price, so, selling it whatever and buying it lower. And they do have the option to be totally debt free. And that sense, that feeling of freedom that I don't have anything registered on my home as a form of debt, it feels very good for a lot of people. But as the mortgage guy who also understands investment and understands the power of access to equity or access to cash when you need it, what I always encourage people to do is, and I'll use round numbers. Let's just say that you got a new property you're buying for $1 million. You've sold your other place for $2 million, and you can buy this new place cash free. So let's just say you're in that situation. Sorry, mortgage free. You're in this situation where you can buy this new place mortgage free. What you can do, and what I'd recommend you do, is seriously consider that home equity line of credit. Guys, with a home equity line of credit, you can establish access to 65% of the equity in your home. So today, that would be, in this example, $650,000. And you'd never need to use this facility. It is there for your use. And a home equity line of credit works similar to a credit card in that you don't pay any interest on it when you don't use it. And I call this 650 grand your opportunity bank, meaning that if in the future something pops up, an amazing investment opportunity, a principal residence that you want to buy, a cottage, an investment property, your child needs to go on a sporting trip overseas, and you're not sure where that funding is going to come from. By establishing this line of credit when you don't need it, right? When you don't need it, you now have access to those funds. And also, Gary, I get a lot of people approaching retirement, 65-ish or in that range, where they're still earning good regular income. And they're like, Dion, I don't need another mortgage. We're good. We're going to be mortgage free in a couple of years from now. I always encourage them to say to them, listen, understand that your income earning capacity right now is greater than it will be in 5 years. And so today you can qualify for that $650,000 HELOC. But in 5 years from now, you won't, because you'll be on your pension income, which will usually be greatly diminished, and they won't have access to that. And the funny thing is, if you qualify for that HELOC today, in 5 years, when it's time for renewal or whatever that might be, they're not taking it away from you, right? As long as you've paid your mortgage on time, paid your payments on time. So I call this almost like an insurance policy as well, in that it's the first fallback position in the situation of life events that happen, so you can put your hands on that money. So if you're lucky enough to be in a position like Gary, where you could potentially buy your next property for cash, that's great. But please consider this option as well.
well, yeah, and it does provide so many opportunities. And we've had line of credit or a line of credit on our home for many, many, many years, and that's, like you said, that's allowed us to get into some different business ventures. More importantly, other investment properties. Use that money to invest in other vehicles as well. And we know that right now it would feel that we'll call it expensive because the rates are somewhat higher than what line of credit said we've been used to. However,
Mhm.
it's that access to money, like you just said. Go get it when you don't need it, because when you need it, it's a lot more difficult and
Yeah.
stressful to get. Right? Yeah, absolutely.
Yeah,
That's a
it's one
good
of those
point.
weird things with getting money, guys. It's banks love to give money to people who can prove they don't need it. Right?
Yes.
So if you're lucky enough to be in that position, you should go and qualify for as much mortgage or HELOC as you can.
Yeah, yeah, and also to provide some clarity in what I'll be doing out there. Very much the same thing, and we will still have my real estate team here in Ontario, and supporting our clients that way, and the brokerage, and Keller Williams, and educating agents out across Canada, as I always do. So that doesn't change, and these videos don't change, but it's a unique opportunity, and I think a lot of people, Dion, perhaps have thought about doing something like this, maybe not so, we'll call it adventurous right across our nation, but the GTA has many, or Ontario has many opportunities. Like this move could easily be from here to, Stouffville, where I live, up to Barrie, where homes are cheaper,
Mm.
Wasaga or Collingwood, or even out
Mhm.
to, up in Georgian Bay somewhere along there, or even Canada's or Ontario's west coast over by, Owen Sound and that area.
Yep.
People are deciding to sell their home for many, many different reasons. And some of those reasons, as we all know, is, their renewals are coming up, and perhaps they know, and we've talked about this many times, Dion, that that new interest rate that they'll get will really impact them financially. Well, this move could easily be done right here in Ontario.
And let me ask you logistically, for from the perspective of your children, right? Because a lot of people, when they move, they have to factor that in. How did that factor in for you?
I think one of the funnest things we've done. So my kids are 17, 15, and 14.
Hmm.
And we included them in very, very early into this conversation. Because, of
Yeah.
course, you always want to do what's best for you and your family and your kids. And they have taken this conversation. They've learned a lot and grown a lot, but it
Mm.
became their decision as well, and they're all
Right.
on board. And in fact, I have
Right.
one that's staying here in Ontario.
Oh yes, your
Right,
oldest is going to university.
that's right. She's staying here
Yeah.
and going to university here. However, our other two are, in fact, all three of them are just loving this whole idea and this whole adventure. And that's just the way we parent. We include our kids into these
Yep.
conversations, and it's just made it so much more fun for us as a family. It's a truly a family decision that we're making.
Yep. And I think it's interesting that, you and I are both professionals in this industry, but when it comes time to do things ourselves, we end up leaning on other experts as well. So did you find a good realtor in Kelowna who, obviously has helped you find this property?
Absolutely, we did.
Yeah.
Right, especially when you're entering a new market in a new area, you can do all the research you want, and when you see a home come up and the price looks pretty good, and you get really excited about it, then you make a couple of quick phone calls. You understand the value of having someone that knows the market and says, well, Gare, that is a
Mm.
great neighborhood. However, the school catchment for that area is not the best, or
Yeah.
this or that. And those are things that you just don't get without, really, without boots on the ground out there,
Yeah.
right?
So the local knowledge from an experienced realtor is always important. So just
Absolutely.
everybody listening, Gary's a very experienced realtor, chose to use a realtor to find his own principal residence. And I
Yeah,
would say this, I mean, I'm sure there's a lot of people out there listening who are contemplating a similar move to what you're going through. And I'm sure a lot of it's beyond just the economics. It's, the decision-making process and the involvement of your family. So I'd say to anybody who's thinking about making that jump, you should reach out to Gary because he's now just gone through that emotional and financial, questions and answers. So I would say reach out to Gary for that.
yeah, absolutely. To share our journey and our path. It's one that's exciting and adventurous, and can be a little bit stressful as well. And just having the right people in place obviously makes it so much easier to happen. And
Mm-hmm.
our market here, and that's the one nice thing about living in the GTA, or you could say living in Vancouver if you're watching from the Vancouver area, is it's so much, the value is so much higher than a lot of the other markets in Canada. So when you are making this move, typically you do get to downsize the value of the home. So that has a big plus to it for many people that are thinking about a move like this. So that's obviously should be part of the conversation, right?
Yeah, for sure. And in fact, I'm actually in conversation with some people who have property in the GTA, want to buy property. I think it's out west, and they are going to use a reverse mortgage, Gary. They're going to keep their house in the GTA,
Excellent.
and they're going to take that cash and go and buy that cheaper property, and they're going to kind of fly back and forth, similar to yourself, um, probably one of the last transactions they'll make. But they're a little bit older than you in that they qualify for a reverse mortgage when you don't. You're too young, Gary.
Yes, I'm too young for something. Phew.
All right.
Good stuff. Good
Okay.
stuff. Okay, so let's talk about, obviously what was going on here in, Stouffville and with the market and the number of listings. We're sitting here, funny enough, Dion, is when we sold our home about 2 weeks ago now, here in Stouffville in my price range. So there's like the average price range, which gives us the average days on market, right?
Yep.
However, in my price range, there were over 6 months of inventory.
Yep. Right.
So
6 months.
when we start talking about inventory, again, that means it should take about 6 months for that home to sell, or it could take 6 months for that home to sell because there's so many other properties that are like it on the
Yep.
market. And, there's a lot of factors into why do we sell so much faster than that? How do you stand out from the crowd and everything else? That obviously helps. But we're starting to see that right across the GTA. And if we share some numbers here, Dion,
Yeah, please.
on average, we're seeing, if you just take the averages, we're seeing 3.5 months worth of inventory. Now, if we start peeling that onion away, and everyone loves to talk about condos and how we're at the highest level of inventory for condos that we've seen in years, we are at 6.3 months of inventory for condo apartments in Toronto. So take that big map of Toronto, and we've had there's 6,300 units available at this moment, and
Right.
only 1,000 sold in the month of June. So there's
Yep.
opportunity,
Okay.
right? You start to
Yep.
see opportunity as that probably into the later month of July and definitely into August. I would say, Dion, you're going to have some sellers that, I don't want to use the word desperate. However, I just did. You're going to have some sellers that perhaps are a little bit more motivated than we've seen in the last several years, right?
Yeah, I mean, I can tell you that majority of our clients don't buy condominiums, but some do. That's their choice. With the renewals of interest rates, where they are, jumping from 2% to fives and plus, the cash flow on these condominiums is in the negative, right? For many people in the GTA, and so they're making this decision: do we continue to carry this property as a negative cash flow investment? Or do we just sell the property and in many cases sell it for much lower than they had originally anticipated? Because it's for some of these condo sellers, it's a lose-lose situation. It's like choose your poison. Neither of these is desirable. But do you want to keep losing $1,000 a month in cash flow, or are you willing to just sell the property for 50 grand less than you had hoped and then just be done with this scenario? So this is where right now, especially in that downtown core, and of those 6,000 units that are for sale, Gary, it'd be interesting to see how many of those are owner occupied versus investor. My guess is that the vast majority, probably 60-70% of those, are in fact investors trying to sell their property. And so there it comes down to more of a numbers thing, which is a little bit less emotional. There's certainly emotion involved when you're losing potentially money, either on a monthly basis or on a loss of a sale. But there's a little bit less emotion involved. And therefore, if you're a buyer who's especially an end user who's looking to move in, get your foot on the property ladder, we're seeing some of our clients buy properties for 50 to 100 grand less than they would have bought, just last year at this point in the condominium market.
Yeah, and this thought came to my mind as you were talking there too. Is it's probably harder for people to be losing money every month as opposed to, we never really want to lose money. So take this with a grain of salt, my friends, as opposed to losing, in your example, the 50 grand of equity. Because
Yep.
I'm outlying money every month, and I may not have that money. I may be borrowing Peter to pay Paul type thing, right? Like that might be a harder pill to swallow. So we might see some movement on these condos.
Yeah, and let me be clear: a lot of these sellers aren't losing money; they're selling for less than they had hoped, right? So
Yes.
they're going to still pay off their mortgage. They're still going to walk away with some cash on the day of closing. It's just not as much as they had maybe originally hoped when they first bought that condo.
Yeah,
Yeah.
exactly. Okay, you sent me an article over here from Mortgage Trends, and let's just go ahead and share
Yeah,
that.
sure.
So again, this is from Canadian Mortgage Trends, and this is home ownership costs easing, but long way to go. And this is obviously from RBC. So I'm going to scroll down here, and you walk us through what we're going to be
Yep.
seeing
So
on.
RBC has always published this thing called the Housing Affordability Index, right? And what we see here, guys, on that top table where you see those numbers in blue, is the share of income a household would need to cover ownership costs, right? So what percentage of your take home of your gross income is needed to make your payments on your home, that is your mortgage payment, property tax included, right? And so if you look at Vancouver, guys, that is basically telling you that you need more than 100% of the average income earned in Vancouver to live in a average home in Vancouver. It is kind of mind blowing, right, to see these numbers here. And then Toronto is not much better at 78%. And I guess a lot of people are looking at us going, well, how the hell are people making these payments? So let's be clear, not everybody who owns these properties has a mortgage. Okay, so a lot of these people have no mortgage, and a lot of them who do have a mortgage haven't mortgaged all the way to 80% of their property. They might have sold, put down $1 million on their next purchase, and they now have a $500,000 mortgage. So, as much as this is the number as if the property was mortgaged, many of them are not mortgaged. And I've been saying this for the longest time, Gary. It's sad to say that I think there will always be fewer new entrants into the real estate market than we had traditionally had over the last 15 years. The next 15 years are going to look very different. And the people who do enter are going to do so with significant help from their parents or grandparents who have been the beneficiaries of these increases in prices. So even a lot of the first time home buyers, I just helped a first time home buyer buy their first property at $850,000. She's in her 30s, but she put $300,000 down. Much of it was her hard savings, and some of it was gift from family. But see, that person there, even though they're buying for 850, they're not taking a mortgage for an 80% loan. They're taking a mortgage for less. So that's how these numbers work, guys. When you look at this, you go, how in the world are people doing this? It's because they're bringing more money than you would expect to the purchase table, right? Now, if we go down to that graph below, what we have here is the affordability index. And you can see that dotted line that runs horizontally across the page. It's 40%, just over 40%. That number is actually 44%. And guys, this is the what they call the gross debt service ratio created by the lenders, which say ideally they want you to be spending 44% or less of your monthly income on housing. So 44% is that safe number that we've always had in Canada. Now, once we look at the graph that overlays it, and I think I'll bring your attention to the yellow line, which is the average of all property types. What you'll see is we're right now deviated from that 44% number up, as you can see there, at 60%, which is the national average. Let's take a look at back when we last touched that line, Gary, that average line, which is around the year 2020. And any guesses why that happened in the year 2020? Is obviously because we had this global pandemic. House activity pricing dropped. People were scared about incomes continuing. Actually, let's go back to the last time before that, Gary, when we were at or below that line. And you can see there, guys, it was around the year 2016. Through 2011 through 2016, we had that affordability in range, so to speak. So now we're at this tremendously deviated number of 60%, right? And the question is, how in the world, if at all, are we going to get back to that 44% number? So there are three main ways in which this can happen, okay? One is prices drop, two is interest rates drop, and three is wages increase. So one or many of these things together need to change in order for this number on screen to look a little bit better. Now, when we look at prices dropping, Gary, as we can see here, we have a little bit of a tick down in pricing, right? But I don't think that we can depend solely on that. As you know, recently Trudeau's come on and said, we do want housing to be more affordable. And in the same interview, he said, but at the same time, we need retirees and older persons in Canada to maintain the value of their home because that is where they've kept a lot of their wealth. So it's kind of hard to achieve both of those things simultaneously, right? So is housing price going to drop? I don't think it's going to drop to the extent that this number is going to find its way all the way back down to that 44% number. Wages increasing. What is the likelihood of that? Well, guys, if wages increase significantly enough to impact this number, it means that we have the re-emergence of an issue that we've been dealing with for the last 3 years, which is inflation, right? So I don't think that we're going to see huge wage price growth in the next couple of years. So the one thing that I think is possible and will happen is interest rates will likely come down. Now, as they come down, many people are saying, well, how much do they have to come down? Well, we've seen the impact of 1/4 of 1% on the market has had pretty much no effect, right? It hasn't been enough for people to say, okay, that's it, I'm running into the market. But at what point will people start to really rush into the market? It's the feeling in the industry that we probably need to drop from the high of 5% at the Bank of Canada rate, probably closer to the 4% number. So we're talking about a 100% basis point drop. We've dropped by 25 basis points. If we can get another 2 or 3 basis point drop, then this number will drop to a number where, okay, we're a little bit more affordable. And I think at that point, we'll see a little bit more activity in the market. I don't know if and when we will hit that 44% number, okay, going forward. I think it's going to be, as I said, increasingly hard. I don't think we can expect to hit that number probably in the next 5 years based on what I'm seeing.
It's a long way to go. We're not talking a couple of percentage points. We're talking 20% percentage points, right? 20. That's a big number. And the interesting thing here too, and we were talking about this offline, is after we saw what happened here in 1990 with the interest rates coming down, but also valuations coming down, or what you can afford, and you can just kind of follow along here every time that's happened. So I think we are going to see values come down, but I don't know if we're going to see them come down as drastically as they went up. In fact, I know we won't. It'll be that gradual. I don't know, Dean, if I want to say this, but I'm going to say this. I wonder if kind of like that new norm over the next 5 years, we just kind of hover. You said we're kind of at that 66 to 70%. Well, in Toronto, 79%. I wonder if we kind of hover at around that 50 to 55% over the next couple of years, because that.
Yeah. I wouldn't be surprised that that would be the number, right? And
Yeah.
again, the people who will be buying in that market are people who have significant down payment, or they're above average income earners who can make that type of monthly payment.
Yeah, yeah. And we've talked about this too in some of my other videos that I've hosted. Calgary is a booming market, and right here you can see why. It follows along with kind of that standard, right? And some of these other markets too, you can see, and that's one of the the advantages of moving to Calgary or Ottawa or Edmonton there. But that's
Correct.
interesting. Yeah, good stuff. I like, even though sometimes we paint the doom and gloom. This is we're not breaking news here. This is what and how the mortgage industry has looked at financing for years and years and years and years. And if we kind of follow that along, you can see what's going on here in the market as well. Good stuff. Okay, we should probably end with this a little bit here. So what we're looking at here, and people are always asking. Let me just make this a little bit smaller so we can see it on screen here. Just give that a second here. It should update. Maybe it won't.
Resize.
Yeah. I'll just move it over. There we go. Okay. Now we're kind of seeing it. This is the average sales price in June for the last 10 years. I mean, I'm going to move it over a little bit more.
So for the month of June for the last decade. Yeah.
Yeah. And we were curious to know if it's ever gone up or gone down. And we are now seeing for the first time in a handful of years that our average price in June is down year over year. I'm going to move that over some more.
Yep.
There we go.
So yeah, so we're down from last year, but this has happened in the last decade, it's happened twice by the looks of it,
Yeah. Yeah.
there and
Not
there. Yeah.
even. And
Hmm.
and when we're talking down, like in 2019, it was only down 1.5%, whereas
Yep.
now we're down 3.25%.
Hmm.
You might say,
Hmm.
well, that's not much. Well, it actually is when you're talking at 1.5, $1.4 million. It starts to add up quite a bit. For the month of July, I'm going to suggest that just hovers about the same. We're going to we're going to circle back to this next month to see where we are, but I feel we're going to be at about that same number. And it just to give someone, and what we should mention here, Dion, is we are only looking at detached homes, because when we
Yeah.
do everything, it skews it a little bit. And
Hmm.
detached homes is a good barometer of what's going on in the market, as always.
Yeah, yeah. And I'll say also, if we're looking at July, July and August are almost always some of the quietest months in real estate, because people are in holiday mode. They're not in moving mode, and so I can't imagine that we'll have more activity in July than we did in June.
And it brings me to a good point. Actually, is typically, as you just said, those are the quieter months. Historically, we see a little surge in September from sales. The inventory is there, so it's not like we need to see new inventory. Which leads me to this comment or thought, perhaps too, is if you're thinking you want to be purchasing a home in September, because that's just typically what happens, we see a little surge. I feel we're going to see at least one more interest rate drop before then, maybe two. I don't know, but definitely one. So that'll put a little bit more buyer excitement, we'll call it, moderate excitement into the market. And maybe you are competing with just a few more people. I don't think you were going to be in competing offers, but maybe you're competing with just a few more people. So you might see some really good buying opportunities right now in July and August.
That next rate announcement is July 24. And as I just said, July is an area, a time of year when people aren't really actively focused on real estate. My sense is this, Gary: even if they were to move rates in on July 24th, I don't think it's going to have much of an effect until probably September, when people are sort of back into business mode, right after being on vacation. So I wouldn't be surprised if Bank of Canada drops interest rates in July, knowing that it's not going to have a huge sort of stampede effect in the real estate market at the time.
Yeah, yeah, good stuff. So, what are we saying? There's a lot. We covered a lot on this. An adventurous journey from the McGowans,
Yeah.
downsizing your mortgage in a sense, or getting your finances an acceptable way for you, and leveraging when you. There's a lot of people that have zero mortgage, Dion, and being able to leverage home equity line of credits when you don't need it is a huge piece of the puzzle for anything. You can help your family do some pretty amazing things, whether they're going to school or helping them buy their first home. That's a way to do it, right?
That's it. Yeah, don't look at what feels good in the moment. Think about, 10 years from now, would it be nice to have access to that capital? And in most cases, I don't know anybody who wouldn't like access to capital, right?
Yeah, yeah, good stuff. All right, how
Okay.
do we get a hold of you, my friend?
Yeah, kangamortgage.ca or Instagram at the Dion Beg.
There you have it. So that's Dion Beg. I'm Gary McGowan. We'll see everybody in the next video. Goodbye for now.